Hey, it's Connie from Prosperity Finance, sharing the best financial tips so that you can be more successful with achieving your financial goals. Now, in many occasions, we want to own a property under our own name, just one person's name. It could be at the time of purchase, it's just us. We are single, we just purchase the property under our own name. Sometimes there's other reason. For example, my life partner may not work at the time I purchase the property. Including that partner may actually affect the borrowing amount because my income need to support his or her living expenses. Or sometimes there's other reasons, but anyway, we see so many cases where when people is actually have a life partner, but they choose to purchase property under their own name. Now, it's all fine for that transaction, but in today's session, I'm going to share with you how does that kind of ownership affect future borrowing. So let's firstly take an example. So say Mrs. have a property. Now the current value is 800k, and she only have 200k loan on this property. Now they are about to marry. She meets her husband, and they're looking to purchase their home and rent out that property for $500 per week. Now say that property is worth $1 million. Okay, now they want to know how much they can borrow. What are the options? Okay, so here I just assume they have enough income to borrow $1 million. But the challenge is, how they can meet the LVR requirement by the bank. Firstly, let's make one assumption. Say they have a cash of 200k. If that's a assumption, and they only need to borrow 800k. Now, remember I said their income is sufficient to borrow $1 million. So if they only borrow 800k, that's fine, as long as they have 200k cash. But not everyone has 200k cash, right? So that's option one. Now, option two. Say, for example, they don't really have 200 grand and they want to borrow more than 800k. Let's say they want to borrow $1 million. Obviously, bank won't lend you 100%. So one way to do that is actually cross-secure both secured property, which means put them into one bank. Okay, so say the current property is stay with the A bank. And you borrow from A bank for $1 million. So because they're cross-secure, the bank actually see the two property as one. So they have $1.8 million properties, and they're going to have $1.2 loan. So 1 million plus 200. So that's okay for them because they can extend 70% on this, which is 560k. They can extend 80% on this, so that 800 grand. So altogether is 1.56 mil, and they only borrow 1.2 mil. So that's okay. Now the pro of this method is that it's simple, right? It just go to the same bank. Either you refinance this to that bank, or the application is lodged through the existing bank. But the point is there has to be in the same bank. The cons of this approach that you put all eggs in one basket. If anything wrong with one of the property or your repayment ability, then affect both property. Now, if you follow our YouTube channel, you will see we actually recommend you split your banks as much as possible. But if that's the only option, then go for it. You can cross-secure both. Okay, so that way you borrow $1 million from a bank. That's additional borrowing on top of 200k. So that's second option. Now the third option and also it's our recommended option, is actually keep them separate, okay? But you have to add Mr. to this property title. Let's draw a picture. All right, so if you add Mr. to this property title, that way you can separate the loan. So the third approach would be A bank top up 200 grand, so it becomes 400 because originally loan is 200, so you're going to have 400, right? And then B bank borrow 800 grand. So together you have $1 million to settle this property, but you actually split into two banks. The reason you have to add a Mr. in this case is that the bank will ask you what's the purpose of borrowing that 200 grand. And if you say, I'm going to buy another property, then they will ask you where the remaining funds come from. If you say, oh, I'm going to borrow 800K, then they will work out your borrowing capacity based on your own income and see if you can service the entire loan, even though the loan is with another bank. But they have to make sure you can service all loan at the same time. So for Mrs., obviously it's really hard to service 200 grand, 200 grand, 800 grand. So that's $1.2 million loan. On one person is quite hard, but much easier if they consider Mr. income as well. So without Mr., the bank won't are likely to approve 200 grand just because she needs to borrow additional 8 grand and her income is not enough. So the beauty of this approach is that you split the banks and you just top up the deposit you require and then borrow the remaining 80% from the second bank. So you are more flexible, you are safer, so it's a huge benefit in the long term. And you can unlock the equity from here without giving the cash deposit. The cons is that you need to actually add another person to the title, and you may not want to do that for many reasons. And also there will be legal costs associated with doing that. We will have a session separate to cover how solicitor add another person to existing property. So it's actually quite interesting. So we're going to share that with you as well. But today, I just want to talk about the finance structure. Now, let's say they have 100 grand cash sitting somewhere. You can still borrow $1 million, but instead of using your own cash, and when you need the cash to do something else or for rainy days, you actually have to go to the bank to top up and they may not approve. So what you can do is, for example, you have 200 grand cash, you can still borrow $1 million, but you put 200 grand on a revolving facility. And the 600K is on a fixed term loan. So that 200 grand revolving will be offset by the 200K cash. So you're not really paying interest on that 200K. You're only effectively paying rates for the 600K and that 200K. Okay, so that gives you the flexibility in case you need to access the money very quickly. It's still there. Okay, so this is the preferred approach, but as I said, it's not perfect because that involves adding another person to the title, and also there will be additional legal costs. But we'll give you a personalized advice, and we'll kind of show you the pros and cons in your situation. And sometimes we can even refinance this loan, so that cashback from the new bank probably likely to cover the legal cost for adding your partner to the title. So there's a lot of alternatives. I hope you find this video useful. If so, please feel free to share with your family and friends, and please also feel free to subscribe our YouTube channel, because every week we'll have very good content to share with you. Thank you so much for watching. I'll see you next time.